Hi, in this video you will learn how to analyze a company, a detailed business analysis of a company as enterprise, as industry, as financials, as valuation, and after that you will learn how to see technical chart pattern, and based on the technical chart pattern if there is any buy call or not. All these things we will be discussing in this detailed analysis of a business. Myself, Dhiraj Mondal, a retired assistant professor and associate NCC officer, JIS College of Engineering and 2/49 Battalion Bengal, NCC Kolani. Currently, I am a mutual fund distributor and serving my clients, and also founder Dipanti Wealth Management. So let's discuss today's detailed business analysis. Hi, I welcome to all of you to this session of detailed business analysis of a company named Coal India Limited. You know, the Coal India is one of the largest mining company, coal mining company basically, and they are providing coal to power sector and steel sector. So this is a PSU company, and all the energy from fossil fuels, it is coming from Coal India Limited. So we are very much dependent on this particular company named Coal India Limited. So today's discussion will be on Coal India business analysis. Here one by one we will be discussing about the company, then its financials and valuation. In the financial part we will be discussing all the health structure of that particular company, and we will be discussing as a business, as an enterprise, what about this particular company. Then we will be discussing the sector, industry. Then we will be discussing the valuation and also governance parameter. And after finishing this particular part, we will be discussing the technical part, and based on the technical parameter, what is the status of this particular company right now, if it is a worth buying or not, that will be discussed in the lecture. So let us start. Myself Dhiraj Mondal, founder Dipanti Wealth Management and a mutual fund distributor. You can follow me in my YouTube channel named Dhiraj Mondal. Also you can follow me in the Twitter also. So let us discuss. Coal India Limited is mainly engaged in mining and production of coal, and also operates coal washeries. What is coal washeries? The coal is basically washed. When the coal is mined, then there is some impurities like soil, stones, magnetic material like iron, and lot of things. So these particular impurities has to be cleaned, and it is cleaned by coal washeries. The major consumer of this company are power and steel sector. Consumer from other sector include cement, fertilizer, bricklin, etc. So in the picture you can see this is coal, and it is also named as diamond, black diamond. So we have a huge dependency on coal right now because it is producing electricity, and we know that without electricity, without power, we cannot survive. Let us discuss the company overview. The company is basically have some history. It was incorporated in 1975. Coal India is involved in the production of coking coal, semi-coking coal, and many more. Now, what is coking coal? What is semi-coking coal? This is totally technical term. The coal basically, when it is mined, then there is some moisture content and impurities in the coal. After washing the coal is basically compressed in the carbonization process or pyrolysis process. The oxygen, with the absence of oxygen, some heat is produced for some span of time. Then what happened? The moisture content of the coal is extracted and totally carbon content will be there. So that is your coking coal. So it is basically made by BCCI, Bharat Coking Coal Limited, Bharat Coking Coal Limited. So all this we will be discussing afterward. So semi-coking coal and many more. Coal India Limited is the single largest coal producer in the world and is owned by the Ministry of Coal, the Government of India. Coal India Limited has its corporate office in Kolkata, Rajarhat, and all the operations, all the official activities is done from Kolkata. So you can say it is Coal India's headquarters. The company aims at broadening its business to satisfy the growing requirement of coal market. Their business network consists of 82 mining sites dispersed over 8 provincial states of India to address all its customer requirements. The company is also listed on the Bombay and National Stock Exchange. So you can see Coal India is listed here. The share price right now 395, 396. So here basically we can trade this company in the stock exchange. Let us discuss about the merger and acquisition. Coal India, basically there was some merger. Coal Mines Authority Limited was established as a private company and it is currently headed by Mr. Pramod Agrawal. The company joined hand with Steel Authority of India called SAIL, Rashtriya Ispat Nigam Limited, NMDC Limited, NTPC Limited, and Rail India Technical Economic Services Limited signed and MOU, Memorandum of Understanding, with the said corporation. Along with this, many companies like Mitshu and Company Limited and CMPDIL have signed and MOU and established a business connection with Coal India Limited. So these are the merger and acquisition part. Coal India Limited, it is a Maharatna company. It is a parent company of 7 producing subsidiaries, namely Eastern Coalfield Limited, Bharat Coking Coal Limited BCCL, Central Coalfield Limited, Western Coalfield Limited, Southern Coalfield Limited, Northern Coalfield Limited, and Mahanadi Coalfield Limited. So these are the 7 subsidiaries. So these are the 7 subsidiaries and Coal India is the parent company of these subsidiaries. What are the services this company provided? Coal India Limited has an extensive spectrum of products that they offer to their customer. What they offer? They are offering coking coal, non-coking coal, semi-coking coal, middlings, washed and beneficiated coal, CIL coal or LTC coal, coke. Coal fines, coke fines, tar, heavy oil, light oil, soft pitch. So I know there is some terms which is basically not known to you. Coking coal and non-coking coal means coking coal is having some hardness. So there is called some shatter index, hardness grindability index. So based on that particular thing, we can measure whether the coal is coking or non-coking. It has some free swelling index. So lots of parameter, and it is totally technical term. Just non-coking coal is used for power plant, just remember, and coking coal is used for steel plant. Why? Because in the steel plant, high calorific value or high grade coal is needed, because the steel plant require high energy because of the iron ore. For the purpose of iron ore melting purpose it is used. But in the power plant, low grade coal can be used, but in the low grade coal there is some maximum amount of ash particle. In the coking coal, the ash content is very less and it is very high quality coal. So anthracite, bituminous, lignite, these are the coal types. So basically subbituminous or bituminous coal is very much expected for steel power plant. Anthracite is not used at that level because of this stickiness, but subbituminous coal is very much essential product for steel power plant. So there are four types of coal. You can search in Google also, types of coal. So you will see that anthracite, bituminous, subbituminous, lignite. So there are various types of coal, and the most carbon content is contained by anthracite, then bituminous, then subbituminous, then lignite, and after that peat and all this. Okay, so here non-coking coal, semi-coking coal, middlings, washed and beneficiated coal. So lots of things, and tar, pitch, these are the services, these are the product which Coal India providing. Let us talk about the milestone. In 2019, company converted into a public limited company. 2009. In 2016, the multinational company launched a web portal for the MSME sector. Following that, in 2017, they started a portal named MDMS, that is Mine Database Management System, and in 2008, Coal India Limited was awarded as Navratna status. During the year 2015, they received a quality certificate ISO 9001, followed by another quality certification ISO 55001 in 2011. They have got some awards also. So awards and recognition part, let us discuss. The company was honored with Public Sector of India Award presented by Associated Chamber of Commerce and Industry. Coal India Limited was facilitated by the Ministry of Health and Welfare, Science and Tech, Earth Science, Government of India, as it was the first PSU to use its CSR funds for the scheme Thalassemia Bal Seva Yojana. CSR means corporate social responsibility. As this company is basically PSU company, and every company, every industry, they have some responsibility for the society. So through corporate social responsibility fund, they are providing some facilities to thalassemia patients. So it is like a social service. Coal India grabbed a trophy for winning the best performer in executing the creative process of fully automated tendering process, and they received the CSR winner award for rural development and infrastructure. Now we will be discussing the very important part named business or enterprise overview. As a business, as an enterprise, all the scenarios of positive and negative we will be discussing. Every company has some positive points, some negative. So first of all we will be discussing the positive part. So point number 1, largest coal producer globally, accounting for 78% of India's total coal production, ensuring a dominant market position. We know that Coal India is the largest producer of coal and it is accounting 78% of coal, total coal production. So main coal producing company is your Coal India. So we are very much dependent on it, Coal India. Government backed enterprise, and you know that it is fully backed by government, benefiting from policy support, regulatory flexibility and strategic national importance. So it is a government company, and likewise whatever the government subsidies, government initiatives, government some policies is made, it is benefiting, this company is benefiting on this. Robust infrastructure and logistic development, improving coal transportation efficiency through railway and conveyor belt network. So they are transporting the coal through railway, that is your goods train, through goods train and conveyor belt network. The company earns revenue through two modes. Free supply agreement mode is the one where Coal India is into long term bipartite with power companies, wherein the company is supposed to supply a fixed quantity of coal and the power company must leave the quantity of coal as agreed. Another mode is e-auction. So first mode is your free supply agreement and another one is your e-auction, where Coal India sells coal to buyers through an online competitive bidding process. So in the online system there is some bidding process and Coal India is taking part in the bidding process and they are selling coal if the bid is okay for them. This system ensures market driven pricing and is aimed at industries that do not have FSA or require additional coal beyond their FSA quota. So some free supply agreement quota is there. If they are surpassing that particular part, then they are buying the coal through bidding process or whatever the other process they are applying that particular process. In financial year 2014, the company reported its highest sales of 753.5 million tons, showing a 10.02% year-on-year growth on record dispatches to the power sector. So in the 2014, company posted its highest sales and very 10.2% year-on-year growth. It is a very good number of growth because this company is having sales growth of 7-8%. You can see from here also the company 10-year sales growth 7%, 5 years 8%, 3 year 1%. So this company is having some limitation. We will be discussing in the negative part also. But here basically we have seen this particular growth in 2014. It is a very good point or important point. Diversification into coal gasification and renewable energy aligning with India's energy transition goals. Next point is your planned production ramp up of 1 million ton by financial year 27. So they are basically expecting some production of 1 billion ton by 2027, ensuring long term revenue visibility. For 9 month FY25, the company's production has increased by 2% to 543 metric ton. So these are the positive points as enterprise, as business. But company has some negative point also as enterprise. Heavy dependence on domestic power and steel sector, limiting revenue diversification. You know that steel sector and domestic power sector, they are the consumer of the coal. If they are denying to buy this particular product and they are taking this from Australia and other country, compared to, that means there is some price band. So if they are getting in below price, they will be in the danger zone. So that is the heavy dependence of the power dependence on domestic and power sector. That is the revenue diversification is limitation. There is some limitation in terms of revenue diversification. They cannot sell to you in your home. They have to sell this particular product to industry. Technological lag in mining operation, increasing cost compared to global mining giants. If I am talking about the mining operation, then people are mining coal and through conveyor belt it is coming. But there is some huge technological gap. Because of that particular thing, the cost of the mining operation is increased, and if we are comparing with respect to global player, then they are applying some high technology equipment. So as a result their cost is decreasing. So this is a very negative point. Limited pricing flexibility in free supply agreement, impacting margins compared to e-auction revenues. So there is some pricing flexibility limitation. Whenever I am talking about the free supply agreement, then we are facing some problem regarding pricing flexibility limitation, and as a result company is suffered some margin contraction if we are comparing with the e-auction revenue. So these are some negative points. Now let us discuss about the industry overview. The positive industry overview are high dependence on coal despite India's renewable energy push. Coal remains the backbone of energy production, contributing 49% of installed capacity. There is some high dependence of coal, and India is basically right now a underdeveloping country, and renewable energy like solar energy, wind energy, it is right now in research and development process, and some part is contributing, but there is heavy dependence of coal. Right now 49% of installed capacity is contributed by coal, that is fossil fuel. So we are trying to convert it into renewable energy, but right now we have seen that lots of power plant and whatever the steel plant, they are totally dependent on coal as raw material. Next point, rising power demand in India with coal remaining the primary energy source, supporting sustained coal consumption. as India is emerging country and day by day to day we are heavily consume the electricity power, AC, freeze, the demand is increasing, so the power demand is automatically will be in increasing order for the next 20-30 decades. Next 20-30 years we will be seeing there is a heavy rising, that means the power demand. So this product cannot be less depend, that means demand of the product must be in increasing order always. So as an industry overview, the product is a very much essential product, we are dependent on this particular product. Government initiative favoring domestic coal mining, reducing reliance on expensive imports. Next point, e-auction prices have remained strong, supportive revenue growth beyond regulated contracts. Limited immediate alternatives to thermal power, ensuring medium term demand for coal remains intact. So these are some positive points as industry. Now let us talk about the negative points. The company is highly susceptible to global prices which directly affect its revenue and profitability, since coal is a commoditized product. So basically the company is susceptible to global coal prices and it is directly affected the revenue. Basically when we are talking about the e-auction, then all the coal manufacturing country they are taking part, and we cannot make a price, determined price for the e-auction. It is totally fixed through this bidding process. Next negative point is renewable energy transition gains transaction, with India targeting 50% non-fossil fuel energy by 2030, creating long-term structural challenges. So here we are just going to change the culture, that means the dependency on fossil fuel. We are right now trying to depend on the non-fossil fuel like solar energy. So we are in the transition period, and by 2030 the government is targeting 50% non-fossil fuel energy must be applied in India, so that there must be some contraction in the revenue growth also. And as you know that coal reserve in the country is maximum 2076, up to 2000. After 2076 there will be no coal in India to mine. So we will be seeing after 30 years or 40 years or so, coal as raw material is not available in India. So there is some raw material problem in coming years after 30-40 years. Increasing global push towards decarbonization leading to restricted funding for coal project. Regulatory and environmental hurdles in expanding mining capacity impacting supply growth. So there are some regulatory hurdles, environmental hurdles. If I want to expand the mine, then there must be some permission from the regulatory department, some from environment department. You cannot mine everywhere. If there is some people are residing over there and there is some coal mines, so you have to take some permission from the authority. Next point, coal shortage in peak demand region, highlighting supply chain inefficiency. When coal shortage is in peak demand, that means sometime in summer season there is lots of power consumption, and because of that power plant they have to produce more electricity, but at that time maybe there is some shortage of inventory. Because of shortage of inventory, there is some disruption in the supply chain, and as a result we are facing some power shutdown, power cut. So that is another negative point. As governance overview, let us talk about the positive points. There is a strong promoter holding of government with 63% holding. If you are coming to the screener.in, search Coal India here, and you will see in the investor part there is 63.13% promoter holding, and this is basically nothing but the President of India acting through Ministry of Coal. So it is government backed company, and 63.13% shares in the hands of government. So this is also a positive sign for governance parameter. Stable management with government oversight, ensuring policy alignment and financial prudence. So the management is very much stable and efficient with government oversight, ensuring policy alignment and financial prudence. High dividend payout, 50% payout ratio, making it a reliable income generating stock. You don't have any idea how much dividend this company is providing. You can see here 6.45% dividend yield. For 1 rupees you are getting 6.45 rupees as dividend, which is a very healthy dividend, and those who are getting cash flow in his or her account regularly, they can get this particular company, and as a result a regular cash flow will be coming into a people's account. So for dividend point of view, this is a very attractive or interesting company. Strong distributional holding in the company with DII 22.59% and FII 8.58% in the company as of December 24. Let us discuss about the institutional holding. Here you can see in the investor part, right now 23%. So basically from last year to current year, DII increased is holding, and also FII is little bit decreased. You can see here maximum 5% share in the public hand, and rest of the share 95% share is in the strong hand. And in the mutual fund industry, Life Insurance Corporation of India, HDFC Trustee Company, ICICI Prudential Value Discovery Fund, Parak Parik Flexi Cap Fund, Bharat 22 ETF, SBI Nifty 50 ETF, they are bullish on these particular stocks. Life Insurance of India, LIC, where your life insurance is there, they have 9.79% share of Coal India. So the institutional holding is very much strong. Only 5% is in the hand of retail investor like us. So it is a very good point. Next point, the company has a strong conversion of profit into cash flow, with 102% of its EBITDA getting converted into operating cash flow over last 6 years. whenever company selling its product, then there must be the money of that particular selling product must be coming into company's home. How we can see this particular thing? It is seen in the cash flow statement. If the operating cash flow is positive, that means company is getting cash from the buyer. If I am comparing 2025 cash flow, that is 29,200 CR with previous year 18,103 CR, you can see there is 161% year on year operating cash flow increasing order, 18,000 to 29, that is 61%, 61% year on year. So always remember, the operating cash flow must be positive. That means the company is getting cash in its hand. And also, some in the balance sheet you have also, you can see here other asset. The inventory is your 12,000 CR. Trade receivable, that means this money has to be come into company's account, 12,000 CR. Cash equivalent 34,215 CR. This cash equivalent, from this cash equivalent, company is providing dividend to you. So lots of cash in company's hand, and as a dividend you are getting this dividend every year, 6.45% dividend, and also company is debt free. Now let us talk about the negative points of governance. Frequent government interventions such as mandatory coal price caps can reduce profitability. Always remember, when we are talking about some PSU company, it is basically mainly the government is the main promoter here. So when government is main promoter, government cannot run the company as in the view of profit making business. Always there must be some subsidies, there must be some release for the common people. So people of India will be benefiting from that particular company, and as a result they are always capping the price. So what is the product? Coal. The coal price is capped by government for the betterment of the society, for the betterment of the people of India. So Coal India is one kind of service company. They are not increasing the coal price drastically, because if they are increasing this particular coal price, then the per unit cost of power will be huge and you don't have any control. So government always look into this price chart, and frequent government intervention and mandatory coal price cap already it is observed by government of India, and it is a very negative point for the profit point of view of a company. Next we are talking about the financials. Some positive parts of the financials are: it is a debt-free balance sheet ensuring financial stability and flexibility for expansion projects. A debt-free company, how we can say this is a debt-free company? You have to see the debt to equity ratio, 0.09% debt to equity ratio, and in the balance sheet you can see the borrowings, 9,446 CR borrowing, and here maximum borrowing is for long term borrowing, and short term borrowings is your 1,523 CR. Some lease liabilities are there, 237 CR. Now let us see if the company today, if this company wants to repay the borrowing money, then we will see the other asset and 34,000 CR money is in company's drawer, that means company's bank account. So 34,000, from 34,000 CR, if I am reducing 9,000 CR, then already in my hand or 25,000 CR. So I can easily say the company can make it zero. The borrowing can make it zero easily. You can see here every quarter the company is making some profit. 9,593 CR. March quarter company made some profit. So only one quarter profit can be replaced in the borrowing section, and the company will be zero debt company. That means zero. The company is almost, no, not almost, 100% debt free, I can say from this statement. I hope it is clear. This is how we need to analyze the balance sheet. Is the company, this company is capable enough to pay his debt or borrowing? So it is a very healthy sign for the financial parameter. Last few quarter we have seen there is some contraction in revenue, but these particular things already overcome. That is why I am discussing this company. There is some positive outlook of this company. Let us see in the coming points. Next point is a robust free cash flow generation. 30,000 crore annually, supporting dividend and future investment. So the free cash flow already I have discussed here. Go to the cash flow statement, 30,000 crore almost free cash flow. So company can expand its business, and if it is not expanding, then as a dividend you will be getting the money to your bank account. Just imagine if company is giving you 10% dividend every year, which they are giving actually high dividend yield 7 to 9%, making it attractive for long term income investors. So I am considering the company is giving me 10% dividend every year. So what will happen if the company share price is 100? Then within 10 years, the share which you bought at rupees 100, that will be free, because already you have got 100 rupees as dividend. So this is how, if you are long term investor for 10-15 years, then you will be seeing your cost price of the share is zero because of the dividend payout of the company. So always remember, if you are long term investor, you never lose money if you are investing in the right company. Consistently strong EBITDA margin 30% supported by the e-auction realization, that is also a positive sign. So strong EBITDA margin we have seen 30%, which is supported by e-auction realization, and company is producing 7 to 9% average dividend. How we can see? You can see from here also. You can see here dividend payout 121%, 95%, 121%, 133%, 146%. Last year 46% dividend payout, previous year 42%, then 47%. Next point, operating leverage benefit with rising production volumes, improving cost efficiencies. So these are some positive points. Now let us discuss about the negative points. Over the last 10 years, the revenue growth CAGR has been just 7%, but profit growth CAGR being 9%, which can be reflected here. Last 10 years, the sales growth, revenue growth or sales growth 7%, and profit growth is only 10%. So the company is some limitation to expand its business. That is why we are getting the dividend from the company, because there are limited coal mines. You cannot mine coal here and there, and coal, you know that a long period of time, if there is some earthquake or tsunami, then the plants, human beings, they are basically coming under the ground, under the soil, and with the absence of oxygen, if this particular organic material is compressed, then it will be made a fossil fuel like coal. So it takes time, lots of time. So we cannot say that within 10 years there will be a 50 number of mines we will discover. It is not possible actually. So that is why the company has some limitation. Coal price volatility impact earnings, especially in global e-auction pricing. You know that when global e-auction is coming, then the coal price volatility is coming, and that is also impact the company in financial parameter. Next point, declining realization per ton in fuel supply agreement, leading to weaker revenue growth compared to e-auction sales. So here basically the fees, according to the fuel supply agreement, there is some coal has to be produced to the consumer, and here the declining realization per ton in fuel supply agreement, which is basically leading the weaker revenue. That means here in the e-auction sales there is some price contraction or the bidding process are there, and here because of that particular thing some revenue growth impacted. That is the negative point as financials. Next we will be discussing the valuation part. How we can value this company is cheap or overvalued or at reasonable price. So the P ratio of 6.9, which is at reasonable price compared to 3-year and 5-year median P of 6.6. How we can see here in this particular, how we can realize this particular point? Go to the screener.in and see the price to earning ratio. Here you can see it is your price to earning ratio. Now click on this 3-year median, 3-year P chart. You can see median P is your 6.6. So here right now the company is trading at P of 6.9. P 6.9 means what? It is profit to earning ratio. It is also called payback period. Payback period means how much time is required to get your money back. So almost 7 years required to get back your money. That means after 7 years your money will be doubled. This is your payback period. So P means your profit to earning ratio. So price of the share by EPS. You know the price of the share is your 396 right now, and earning per share you can see from the profit loss statement 57.37. So if I am talking about the P ratio, then divide this 396, go to your calculator, and 396 divided by 57 point something. So 57.37. So 57.37. See 6.9 you can see here. So this is your price to earning ratio. So price to earning ratio means payback period, or in how much they required to get back my money back. Or you can say for 1 rupees earning I am investing 6.9 rupees to this company. This is called your P ratio. P ratio is less means it is good, but if P ratio is high, always it is not, we cannot say it is bad. P ratio always we should compare with the peer group, peer company. We cannot compare the P ratio of Coal India with P ratio of Hindustan Unilever. So for Hindustan Unilever the P ratio 53. We cannot compare with a FMCG company to a mining and material or mineral product company. Always compare with the peer group like Vedanta, Lloyd Metals, NMDC, GMDC. So these are the company which are having P, and with respect to the company is trading at very low P. Also we can consider EV to EBITDA, enterprise value to earning before interest, tax, depreciation and amortization. If it is low, it is also good. So that point is written here, cheap valuation 3.7 times EV to EBITDA at its historical average. So for PE ratio, the company is reasonable price, at reasonable price or undervalued, or EV to EBITDA, you can see here, go to the price chart again, it is your EV to EBITDA. So 3.7 is your median EV multiple, and right now company is trading at 3.8. So the price is not so much high, we can consider this company for the investment. So this is about the valuation part. Next, attractive free cash flow yield 11%, supporting long term shareholding return. So the free cash flow already we have discussed, 19,000 rupees free cash flow, and here basically for long term shareholder return you will get a 11% cash flow yield. And dividend attractiveness continues to drive investor interest, providing downside protection. As the dividend is attractive, if the company price is down, if the company price is up, you are getting regularly dividend, so almost after few years your cost price will be eliminated by the help of the dividend. So as of 12 May 2015, the 2025, the valuation is in the attractive price. So all these thing in the screener of dot in this website, it is showing here, you can see 2,43,000 crore company, current price 395, 396, book value 141, 161, and here basically some ratios are given. So these are another topic we will be discussing sometime. Quarterly result, you can see here, the March quarter it is providing 37,825 crore sales, which is a very huge sales. In the March 2023 we have seen a best sale growth, but after that we have seen some contraction. Then again from June 2024 to March 2025, the revenue growth or sales growth is in increasing order. As a result, we can see the profit after before tax 8,153 crore to 12,873 crore. So the net profit automatically increased from 6,000 crore to 9,593 crore, and EPS is also in increasing order, 10.21 to 15.58. EPS means earning per share. Per share the company is giving you earning 15.58 rupees. So these are some parameter you have to see here in the balance sheet. Profit and loss statement, same pattern, you can see the sales is increased compared to previous year, 143 1,43,369 crore. And profit loss statement says the company is a profit making company, and also you can see the balance in the balance sheet. The borrowing is totally can be eliminated by the help of the asset the company is having. So the company is having 34,000 cash equivalent, that is cash in hand, and it can eliminate the borrowing. So company is debt free. In the cash flow statement you can see the positive cash flow 29,000 crore, and cash flow from operation is positive, means it is a good sign, and company is consistently making money, that we can say from this cash flow statement. Let us talk about the ratios. The debtors day 32, ROC 48%, that is a healthy sign. Return on capital employed, that means how much capital company employed and what is the return company is giving. So these are some ratios which is right now healthy. Shareholding pattern: 95% share in the strong hand and government backed, so only 5% share in the retail hand. So this is a promoter driven or the strong hand company, and the strong hand is not willing to dilute its share. You can see the pros and cons. Company is almost debt free. Company is providing good dividend yield of 6.45% actually. Company has a good return on equity, that is your equity. With respect to equity, what is the return? 48.6%. Company has been maintaining a healthy dividend payout, 45% dividend payout. Only the cons is company sales growth is 8.33% over last 5 years. So that is discussed because there the company is having some limitation. That is why the dividend you are getting. PR comparison, there are competition with Vedanta, Lloyd Metals and all this. So these are the main important part. Now the technical part is not so much important if the company balance sheet and the company business is intact, business is good. But for the sake of some target, price target, technical analysis is required, because human people are investing and there is some emotion associated with the stocks. If there is some negative event, some war like situation or some tariff like situation, some natural calamities, medical problem, lots of things are there, and gold price is increased, bond US 10 years G-Sec yield bond decrease, and like this. So there are lots of things. You know that in the Nifty 50, the Nifty 50 is sometime it is 26,000, sometime it is 21,000. So based on this particular scenario, market volatility, the share price is down, share price is up. So that is the market nature. So in the mining sector, metal sector, you have seen also some index, and based on that we cannot say the company share price will be in uptrend always. It is basically based on the demand and supply. And US 10 years G-Sec bond yield, government bond yield, if this bond yield is in increasing order, then the bond market will be attractive. So the peoples who are invested here, that means the foreign investor, institutional investor, they are shifting the cash from the equity market to fixed income securities. As a result, the share market falls. If there is some rate cut from the US government like Federal Reserve, so you know that this man, Federal Reserve chairperson Jerome Powell, is sometime rate cut happening, this particular man. If there is some rate cut, then in the market, share market, there is lots of volatility. If rate is hiked, then again volatility. So if rate is cut, then what happened? Share market will be attractive, because the bond market is providing will be less attractive. And if rate is hiked, then share market will be down like this. So when there is some rate hike or 10 years decent bond yield, there is some interest rate hike, then the money will be flowed in the bond market, and as a result equity market will be less attractive. So for 1% rate cut, the stock market may up like 10 to 15%. So it is heavily dependent on this particular scenario, and US is regulating this particular market. So that is why the public emotion or institutional buyer or seller, they are acting like this, and based on that particular emotion, the candles, these particular things we can see the candles is made. So we are going right now we are coming to the technical chart of Coal India Limited, and here you can see the Coal India is right now trading from its 52-week high at a down price of almost 27%, and it was coming to the 35% down. So a PSU company which is having a very healthy balance sheet, healthy dividend payout, if it is coming at 35% down, it is a opportunity. It is an opportunity, and you must have understood like in the lecture I have discussed. So based on the right now based on the scenario, we can see the company is down right now 27%, and the company, a very large cap company which is down 27% from the recent lifetime high, then automatically after the scenario of this Donald Trump tariff issue and the market was overvalued little bit, and after this particular scenario, right now the company is in the positive trend, and we can expect some positive growth in the stock. Here you can see there is a cup with handle or complex cup with handle pattern is made by this company, and the depth of this particular company is 14.6%, and generally the depth of the cup is the technical target, and the next technical target can be assumed 450. So this particular company, there is 14% medium to long term gain, and here you can see if I am talking about the long term gain, then within 2 to 3 years we can expect 37%, that is the lifetime high of the company, that is your 541. So from the current market price, the company is looking attractive, and in this range, here you can see this is the range. In this range of 350 to 380, there is a high buying chance of institutional investor. So you can see the volume indicator, how much buying is there. So it is for long term investor, the investor who have not patience, this company is not for them. So make sure you are having 3 years time frame minimum, so that you can buy this company, and this is not a suggestion or recommendation to buy and sell, this is only for educational purpose. So as a conclusion, we can say, as per the overall business analysis, we can conclude the company was facing some business issue, and it has been reflected by declining realization per ton of fuel supply agreement, leading to weaker revenue growth compared to e-auction sales, and as a result we have observed the quarterly sales of the product was down, but recent quarterly result showing sales of 3825 crore, which is improved compared to previous year quarter as discussed, and it is observed the quarterly net profit of the company was down, but recent quarterly result showing the net profit 9593, which is improved compared to the previous quarter. So we can expect 37% gain from the current market price of 395 or 396, whatever it is, within maximum 2 years time frame. And remember, don't forget, it is giving already 7-8% dividend. So for the company it is a good buying range. 350-60 to 380 a best buying range. If I am talking about the ratings, then NSE code is your Coal India and BSE code is your 533 to 78. Business, as a business company, rating is 9 out of 10. As an industry, 9 out of 10. As governance, 9 out of 10. As financials, 8 out of 10. I would recommend 8.5 out of 10. And as valuation, 9 out of 10. So total 8.8 out of 10. That is a good or excellent company. But whatever the company, if the company is looking very attractive, don't invest more than 5% of your net worth in any single stock, and don't invest money in the equity market, which is required within 3 years, and don't invest from borrowed money in the equity market, as the market is volatile in nature. Don't invest based on tips, and it is I am not also recommending you to buy and sell. Discuss with your financial advisor and take your call. Don't invest a single rupee if you are unable to understand the business. There is always a risk of capital erosion in the market, and we should be ready to face those circumstances too. So portfolio diversification is always advisable. You know that I am talking the company right now trading at 395, but it can go beyond 395. That means in the 350 360 range you can get in the short term, but in the long term point of view, the company must go up. You understand? So patience is required to invest in the stock market. This report is analyzed by Dhiraj Mondal, mutual fund distributor and founder, Dipanti Wealth Management. My WhatsApp number is this, and my email ID is this, mondal.dhiraj80@gmail.com. You can write me in this particular email. If you have any doubt, write down in the comment section. I will discuss all these things. This particular source of the chart, financial data and screener data is from screener.in and Invest in the Academy Private Limited, and the chart is from tradingview.com. So today up to this, I hope it is it will be very much helpful to take a decision and how to analyze a company based on the technicals, financial and everything. So this is how you can analyze a company and take our call. So this video is for to educating people of India and outside, those who have not knowledge how to analyze a business and how to invest in the stock market. So today up to this, thank you all. So what about my analysis? If it is added some value in your life, then don't forget to subscribe my channel Dhiraj Mondal and share it with your friends, family, and press the bell icon to get everyday notification, and also follow me in Twitter, so get everyday real time update. There is no recommendation to buy and sell of any product, it is only for educational purpose. Please take advice from your financial advisor. Thank you.